Today's topic of discussion is Goods and Services Tax, that is GST Part 1. In the Part 1, the dimensions we are going to cover are Introduction, GST Architecture and Reforms brought about by GST. So let's begin with the introduction first. The Goods and Services Tax, that is GST, is a value-added tax levied on most goods and services sold for domestic consumption. GST got parliamentary approval in 2016 and was renumbered in the statute as the Constitution 101st Amendment Act 2016. It was finally launched in India on 1st July 2017 as a comprehensive indirect tax for the entire country. The GST is paid by consumers, but it is remitted to government by the businesses selling the goods and services. It is a comprehensive multi-stage destination-based tax comprehensive because it has subsumed almost all the indirect taxes except a few state taxes. It is of three types. First is CGST, to be levied by the centre, SGST, to be levied by the states, and IGST, a tax levied on all interstate supplies of goods and or services. All these taxes are levied at rates mutually agreed upon by the centre and the states. Initially, GST was levied at 4 rates, that is 5%, 12%, 16% and 28%. The schedule or list of items that would fall under these multiple slabs are worked out by the GST Council. Now let's discuss about GST architecture. India's GST architecture is built on the firm foundations of a GST Council and the GST network, that is GSTN. The GST Council is the key decision-making body chaired by the Union Finance Minister with a Minister of State in charge of finance and the Finance Ministers of states as members. It is a constitutional body, Article 279A, for making recommendations to the Union and State government on issues related to goods and services tax. It is considered as a federal body where both the centre and the states get due representation. This is envisaged as a due federal process to protect the interests of the states. The council is devised in such a way that the centre will have 1/3 voting power and the states have 2/3. The decisions are taken by 3/4 majority. The Goods and Service Tax Network, or GSTN, is a non-profit, non-government organization. The Government of India holds 24.5% equity in GSTN. All states including NCT of Delhi and Puducherry and the Empowered Committee of State Finance Ministers EC together hold another 24.5%. Balance 51% equity is with non-governmental financial institutions. The company has been set up primarily to provide IT infrastructure and services to the central and state governments, taxpayers and other stakeholders for implementation of the GST, that is Goods and Services Tax. The government will use this portal to track every financial transaction and provide taxpayers with all services, from registration to filing taxes and maintaining all tax details. Built on this foundation, India's GST paradigm stands on 2 key pillars: revenue neutrality and GST compensation for the states. Designed on the principle of destination-based consumption taxation with seamless provision for input tax credit with CGST levied by the centre, SGST by the states, UTGST by the union territories and IGST levied on interstate supply including imports. GST is applicable to all goods and services except alcohol for human consumption and 5 specified petroleum products with a common threshold exemption applicable to both CGST and SGST. Now let's discuss about the reforms brought about by GST. The major impact of GST implementation is the continuous chain of input tax credit from the manufacturer till the retailer, as in previous system credit of excise duty paid by manufacturer was not allowed at the time of sale of goods. It creates a common national market by amalgamating a large number of central and state taxes into a single tax. GST mitigated ill effects of cascading or double taxation in a major way and paved the way for a common national market. From the consumer's point of view, the biggest advantage would be in terms of reduction in the overall tax burden on goods. Introduction of GST is making Indian products more competitive in the domestic and international markets owing to the full neutralization of input taxes across the value chain of production. Because of the transparent and self-policing character of GST, it would be easier to administer. Exemptions under GST are: custom duty will still be collected along with the levy of IGST on imported goods. Petroleum and tobacco products are currently exempted, and excise duty on liquor, stamp duty and electricity taxes are also exempted. So that's all for today. We will cover the second part in the next episode. Till then, stay safe.